Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Ladies and gentlemen, we need to talk about Carvana because if you have not paid attention, Carvana is down 98% in the last year, and things are not doing well, or going well rather, over there. So we need to talk about what in the world happened at Carvana, and also what are the lessons that we can learn from the ashes of what is left of this company and translate it to our own portfolio, because hopefully y'all didn't invest in it. I certainly did not, and nor do we bring it up as a possible place to invest. But let's talk about it and pull out some lessons so we can apply to our portfolio and avoid some of these serious mistakes. And a lot of these things we have actually covered in one way or another, especially this year. So let's go ahead and go through it. So how bad are things at Carvana other than the fact that it's down 98% in the last year? Well, first, things used to be fine. Things used to be fine for Carvana. In fact, from January of 2020 to January of 2021, the stock was up 158%. The stock in April, I'm sorry, not April, of August of 2021, it was as high as $377. Today, at the time that I'm recording this, and today is the 12th of December 2022, gotta put that timestamp, but in either case, it's at $5.05. You went from $3.77 to $5 in what, 18 months? That's a problem. Okay, that is a serious problem. So what in the world happened and how can we learn from this? So there are a bunch of things that have happened. First of all, Carvana has never been profitable. That's already a problem. When you look at their net income, the money they get after all the bills are paid, in 2018, they were down, they were negative $22 million. They lost $22 million in 2018. The previous quarter, the most recent quarter that we have as of today, which was Q3 of 2022, they lost $283 million. So we're talking a tenfold increase in losses. And what do you think happens when you lose more money and you have higher expenses? That makes your situation a whole lot worse. And you can see here how drastic their expenses have really exploded over the last several years. And what else do you think happened? Right? Your expenses went up, your sales obviously went down, and what happens in 2022? Just think about it. What do you think happens in 2022 when rates go up, your stock goes down, you probably have a whole lot of debt, right? That's exactly what Carvana has. In fact, they have $9 billion worth of debt, and they only have, which is the worst number in the world other than zero, is $666 million in cash, which just gives you a sign that this just is not good. So you got $666 million and $9 billion in debt in a situation, in a world where interest rates are rising, and they are going to continuously rise all of 2023. That in and of itself is a problem. So what are the things that we can pull out of this? First of all, remember that we said this for 9 months of the year at least. All of those companies that borrow when rates were super cheap in 2020, they are paying for it now if their business has not adjusted. Carvana is one of those, because during the pandemic, it was great for Carvana. People couldn't go outside and shop, right? If you wanted to order something online, Carvana was, or order a car specifically online, Carvana was one of the best places you could go. Car sales, however, in 2022 are down 12%. The profit per car for Carvana is down 25%. These factors are not great, and Carvana has not been able to adjust to it, and they have been on the brink of bankruptcy. Now, speaking of bankruptcy, there's no guarantee that they are going to go into bankruptcy and vanish into the ashes, which is what most companies do in this case. And the reason why I say that is because Hertz was in a very similar position, a year, almost 2 years ago, where they were going into bankruptcy, and their stock was worth less than $1. And thanks to Reddit and memes and just the internet, they were able to pull themselves out, and the stock was, I don't know, exploded somehow and became a company again. They were able to pull themselves out of bankruptcy. So I'm not saying that Carvana will do that. However, that is on the table depending on who tweets about it and how that changes. Obviously, I would not touch this stock at all, but it is in penny stock territory. Once it's in penny stock territory, anything can happen, but I don't think it's going to go back to that 377 at any point soon, if it still exists. But the lessons here is you have to pay attention to, one, the business strategy. And that's something that we talk about on the channel. We definitely talk about it in the members only. I always say, okay, well, what do you do and how does that match up for what is going on in the world today? What does that mean with interest rates and how you conduct business? Their business is not successful for what is happening today in 2022, and based on the amount of debt that they have, it ain't gonna finish well, right? And we've talked about, we've done this to the members only too, where I showed on the balance sheet how to look at it and how to see like how much debt you have versus how much you have in assets. And when those two things are way out of whack, like it is for Carvana, this is going to represent a serious problem. And also, again, the business sense of it. Imagine when Carvana has to buy the car, they have to pay a price for those cars back in 2020 and 2021, and those car values are dropping. The profit is down 25%. Guess what? You paid this much for these cars, and now they're selling down here. And if you can't sell them, that's going to be an additional problem for you. So everything is in the wrong category for Carvana. And just things are not organized in the way that they should. So again, I talked about used car sales being down 12% across the board for 2022. Their profits being down 25% per vehicle. And the company was worth, at one point last year in August, $28 billion. Now it is worth $3 billion and probably going to continue to slide. So again, just be careful out there, right? I've said this before, especially with the way that 2020 just really kind of lined up, kind of really skewed our expectations to a degree, especially for new investors, where things that worked in 2020 are going to work in 21. Some of those things definitely didn't work in 22, and some of the things that worked in 22 might not work in 23. You have to be able to make small tweaks and adjustments to your portfolio to make sure that what you have and what you invest in is a good fit for what is going on and what is happening with the economy. Now, later this year, we're going to talk a lot about what I think will be good industries and companies to invest in. Some of these will remain the same. Some of these will be changing based on what we expect. Like the infrastructure bill, now that it was already passed and that money is starting to come out, some companies like Caterpillar and John Deere, they might make a whole lot more sense now than perhaps what it had been in the past. So those are things that you want to keep your eye on. What you also want to do is keep your eye on things that you might want to get rid of. Any company that has that much debt and this little assets, they're going to suffer. And they've already suffered so far in 2022. And again, rates are expected to be to continue to increase all of 2023. So we'll see what happens there. But again, at the end of the day, pay attention to the business that you own. As an investor, as a stockholder, you own a business, and you got to make sure that business makes dollars and cents. This one is not one of those. And again, just to give you a visualization of how crazy some of these net income numbers are, you can take a look here on the screen. You can see how things have gotten worse as you have gone further and further into the year, which is not what's supposed to happen in the business. You can lose money every now and then. You're supposed to eventually kind of get out of that and be fine. That's not what Carvana is doing. So they definitely have to get those things changed. Now, the last thing I'll bring up here is they are an outlier in this space because CarMax is also in the exact same industry. And yeah, CarMax is down, but it ain't down like this. CarMax is not running into a potential bankruptcy situation. Similar to how I talk about Costco and BJ's and Walmart and Target. Yeah, Target is bad, but it ain't this bad, right? And it's an outlier because Walmart is okay, right? Costco is okay, and this one's just way out there. So there's something specific to Target, and there's not in the same category as Carvana either, but there's something specific to Carvana where it's like, hey, look, I really need to take a look at this business and decide what can I learn from it, and definitely not invest in something like that. At least I wouldn't. You do what you do. Some people got, alternative thoughts and opinions. And we'll see. Maybe it could be a Hertz. Maybe it could be a GameStop. Maybe it could be an AMC. It's in that category now where it's struggling and people can take it and do whatever it is they want to do with it. All right, so that is it for me. Last thing, make sure you check out the members only. I just released a brand new video today on the math behind investing. And the interesting thing is, because we had an excellent question from one of our members, is why does it matter at what price do I buy? Because I talked about a stock where we were going to buy at 101, where I thought I would buy at 101 and the stock was at 104. They're like, well, what's the difference? It's $3. Well, $3 can actually change your returns by 11% in the example that we talked about. So imagine making extra 11% and compounding that year over year over year. That can make a difference. So the price that you do buy any stock can matter. If you want to learn how that math works, to make sure you check out our members only, that link is right here. All right, so for me, talk to you later. Bye.